joining us this morning. Mark, great having you. This is Harsh here. Let me first start off with what you've spoken about in terms of the India story. You've called 2025 a boring year for Indian markets, but a healthy year for Indian markets. And you've said that there's going to be an earnings inflection. A 16 to 18% earnings growth is what you're penciling in for FY27. What specific data points keeps you upbeat with regard to the kind of numbers that you're projecting?
Well, I suppose the most recent GDP was one, but most of the data hasn't happened yet. It takes a while for the fiscal and monetary stimulus that was put into place this year to trickle through into the economy. So I think that'll happen, and that's the basis for our high teens earnings growth projection for fiscal year 27.
Okay, so that's your take coming in. Mark, give us your sense on, first of all, hi, good morning, and give us your sense on the moves that we are seeing in the global markets, especially the kind of volatility that is trickling in from Wall Street. We've had some major comments coming in from Trump this morning. If you've had a chance to hear some of what he had to say, what is your take on that and the global macros and then the impending effect it could have back home in India?
Well, in the United States, since late October, there's been a drag on the market from the whole artificial intelligence story. And people wonder about the valuations. They wonder about the data centers, whether they'll all be able to be put into place. And that, I think, in a strange way, helps India, because one of the negatives for India this year was it has no artificial intelligence story. There are indirectly, but there isn't any big stock that you can buy that's an AI play like all of the hyperscalers in the United States. So I think that going into 2026, and a lot of people are worried about the concentration they have in these big technology names in America, India would stand out to me as a good place to diversify, to get more cyclical exposure. And I think increasingly there is a view that people are too underweight the cyclical sectors in the world, and there's a good chance, given how cheap they are, for how long they've underperformed, how small they are, they could actually be big outperformers next year and thereafter.
Very interesting point, Mark. But when you're looking at those very similar or same businesses operating out of India, they've had a decent run, right? Does the India story likely mirror the global story where cyclicals are concerned?
Well, it's a very big space. So banks are cyclical and they've done well. But I would also say NBFCs can do well. And the energy space is cyclical, and materials. Those are places that I think are definitely worth looking at this year. It's a broad place to invest in, but clearly it's been a laggard relative to the technology stocks in the U.S.
And Mark, global money rotation, China has been a pocket of preference. If India needs to do double digit in terms of returns, which you've penciled in 15% over the next 12 months, how much will flows matter? How much will earnings matter? And is there a valuation re-rating that you're also penciling in when you're expecting this 15% jump?
No, I don't expect a valuation re-rating for India, but the good news is that it's in line with its long-term average on around 21 times forward earnings. So if the earnings can grow by, our forecast is 17%, then I think that the market could go up 17% and still be on 21 times at the end of next year. With China, we still like it. And I would say that it has done so well. I think people will be looking for other alternatives in the emerging market asset class. India was a laggard this year, so I think it'll be on people's radar screens for that reason. The other thing is that there are more and more voices in China among prominent economists and former senior officials in the People's Bank of China and other parts of the government that they should allow their currency to appreciate. The view is that the trade imbalance between China and the rest of the world has become so acute that it's causing some friction between China and its trade partners. And if they allowed the renminbi to appreciate, that would lower the cost of imported goods. And that would in turn help the consumer when the consumer in China is in bad need of help. So I actually do agree with those economists and former officials. I think the renminbi will appreciate in value next year. If that happens, it would be a natural tailwind for the entire emerging market asset class, including India.
Mark, before we get your view on what is looking attractive to you in terms of sectors, give us your view on some of the commodities. Gold has been slightly under pressure. Brent is once again under 60. But silver, after seeing a little bit of a blip, it's once again at fresh highs. Where are you penciling in the commodities to move from here, especially silver after the kind of run-up we've seen, about 128% since the beginning of this calendar year? What's your take there?
Well, silver is a necessity for many parts of industry, including defense-related products, and those are going to be in high demand over the next few years. Gold, I might just point out the largest owner of gold in the world is Indian households, private owner, 25,000 tons. So they are now $1 trillion wealthier in aggregate than they were this time last year. That's another thing I think that speaks in favor of India. Then I would say oil, of course, can have its ups and downs based on geopolitics, but longer term, there's just a tremendous amount of supply and at the same time, increasing transition to electric vehicles. And lastly, copper, I think, will be very strong on the same basis as silver, an increased need for in defense products, but also I think in the West there's a realization that too much of the industrial metals are being refined in China, and that puts them at a strategic disadvantage. So they want to have their own, and that I think will increase the value of copper. Copper, by the way, is also used in many, many parts of the electric food chain. And in artificial intelligence. So that's what I think about the commodities in general.
Mark, you sit at a very interesting confluence where you understand India well and you have a very good understanding of how FIs are looking at India. And you know, with the rupee sliding, how are FIs, again, looking at India, and how much of that is going to play out in terms of the India returns that you're penciling in? How important is FI participation, either in terms of receding outflows or a possible net inflow number, important from a return standpoint for India?
Well, the first thing I should say is I can't speak on behalf of them, although
Sure.
I am one, because I wouldn't have been a seller of India this year, but they clearly were. I mean, foreign investors net sold about, I think, something like $18 billion worth of Indian stocks, largely to finance a China investment where they'd been underweight or absolutely not in China for around 4 or 5 years. So they, I think, sold India to do that. I think that's out of the way. I think that next year foreigners will be buyers of India, and I actually think the rupee will be higher at the end of next year than it is now. Our forecast is for 87.
Okay, and Mark, let's talk about your view on the Indian markets right now, given the kind of subduedness that we're seeing back home. Any opportunities, if you're spotting it all, in terms of sectors or themes that are looking good?
We like the private banks. We like the non-bank financial institutions, the energy sector. We like the engineering companies, which would benefit still from the government spending on infrastructure. And the IT sector is, you know, a big underperformer this year, but you can't put a date on when the trade problem with America will be solved. But I suspect it'll happen sometime next year, that they'll bring down the tariff, and you'd probably see a relief rally in the IT space on the back of that.
Where within the power ecosystem are you most constructive?
I can't answer that. I'm sorry. I'd have
Sure.
to
No,
ask
no,
my analyst.
I fully understand that. And apologies for putting you in that position. Mark, let me also get a sense. You prefer SMIDs over the larger caps, if I understand right. Is that a 2-year view or a 1-year view?
No, I don't remember. I mean, I think that over the very long term, small and mid-cap stocks will outperform the very large stocks by simple function of their small size and becoming bigger. And many of them are in sectors that just intuitively you would expect will grow a lot, be it hospitality or defense. But that's a very long-term view. That's not just a 1-year view.
Okay, thank you so much, Mark, for joining us this morning. It's been a pleasure chatting, and it's great getting that perspective from, of course, an FI name who's bullish India.